Thank you, Stephanie. Thank you, everybody, for joining us today. Thanks for your patience through any technical glitches. We have some, looks like new wrinkles to start the year of 2023 with. We're just getting used to, so I hope you were able to join us and make it through here. Well, the January report is traditionally a big report. One of the first things we like to look at is what USDA says about final crop estimates for corn and soybeans in the 2022 season. We'll get to that in just a second, but I'll give you a little spoiler alert that we are looking at smaller than expected soybean and corn crops, and that really threw things for a loop today. In addition to the normal WASDE report, we also have grain stocks for December 1st. We'll be talking about, and at the very end, we'll mention the winter wheat seedings report. That report having to do with the crops that are planted for the upcoming season here. Well, let's go ahead and jump in, take a look and see what USDA says for corn in the January report. Here is the U.S. balance sheet for corn. In the far right column are the most updated items that we have for the day. And let's look at the upper rectangle first. And that's where we're going to get our crop information for 2022. So at the very top, we see the planted area stayed the same, but the harvested acres were reduced from 80.8 to 79.2 million acres. The yield on the smaller harvested acres was actually a little higher. It bumped up to 173.3 bushels an acre. But at the end of the day, we're looking at a 13.73 billion bushel crop for 2022. That's 200 million bushels less than USDA estimated the past couple of months. Along with the smaller crop, we also got some demand, two primary demand adjustments I want to point out. The first one is feed demand was reduced by 25 million bushels. That was a small reduction, actually. The larger reduction came in the export demand estimate. That came down 150 million bushels from 2.075. Now we're looking at 1.925 billion bushels of exports. We've been talking on our daily comments a lot about the export sales pace. Just hasn't been good this year. It's still down quite a bit from a year ago, as we'll see in another slide here coming up. But USDA making quite a reduction in those export estimates here in Thursday's report. At the end of the line here, we look at the new ending stocks figure, 1.242 billion bushels. That's down slightly from where it was a month ago at 1.257. The trade was actually looking for something higher, something near 1.3 billion bushels. So this is a lower than expected ending stocks estimate. It also puts the ending stocks to use ratio just under 9% on the year. If you notice, also the average farm price USDA kept it unchanged at $6.70 a bushel. Going to move on now to the world corn estimates. And by the way, there's going to be so many numbers today. I understand if you get a little dizzy. I'm a little bit dizzy myself, frankly, trying to go through this all quickly, but I'll try to make as much sense of it as I can. As we look at the world corn estimates from USDA, let's start in the upper right corner, and we see that the ending stocks for the world corn total was reduced from 298 down to 296.4 million metric tons. That came in slightly less than expected. We were actually looking for just a slight adjustment there. I think the more interesting metric, which we'll talk about in a moment, is the amount of world corn stocks excluding China. That number was reduced from 92.3 million metric tons down to 89.1. So once again, we see a lower estimate of world corn supplies. Turning your attention now to the green rectangle, we look at the crop estimates for South America in the current season. As you probably know, Brazil's had pretty good weather, but Argentina has not. Argentina's in the midst of drought, and they've really had a tough time and in fact had another sharply lower estimate locally from the Rosario Grain Exchange. here on Thursday morning. But for USDA reduced its corn estimate for Argentina from 55 down to 52 million metric tons. I should mention, I should have that Rosario, estimate today. They knocked their estimate down from 55 to 45 million metric tons. So you can see the local view looks much worse for the Argentine corn crop so far this year. On the Brazilian side, just a small reduction from 126 to 125 million metric tons. As I mentioned, the crop conditions have been reported as largely favorable in Brazil. There are dry concerns in the southern end of Brazil, which is closer to Argentina's weather. A couple more things I'd like to point out here. The blue box is the export total for Ukraine, and we see that export estimate increase from 17.5 to 20.5 million metric tons. That's really quite impressive for corn, and it puts their corn exports in the season down just 24% from a year ago. So they've obviously had some success shipping there, as well as trying to get corn out the western end of the country. But USDA raising its export estimate of the corn total from Ukraine by 3 million metric tons. And then lastly, the red rectangle at the bottom of this chart are numbers for China. And we have a kind of an interesting adjustment here. On the left, we see the production estimate for China's corn crop was increased this year from 274 up to 277.2 million metric tons. However, USDA also increased the demand estimate for China, and that's on the right end of the rectangle. You see their demand estimate increased from 295 to 297. So this is almost a wash. It's a slight increase in the corn available in China. I can say, however, that as we look at China's corn prices, they're still quite high. They were trading around, I think, $10.80 a bushel here earlier today, but they're up near their highest levels. Yeah, $10.84 this morning. So those corn prices are still quite expensive in China, which indicates to me that they probably still have more purchases on the way, whether they buy it from Brazil or the U.S. Let's look at these world corn stocks and just how it compares to previous year's total. The red bar on the right shows today's total. It's 3.51 billion bushels of global ending corn stocks, and that's, of course, when we exclude China. This is the second lowest total in 10 years. So we continue to see estimates that tell us that corn supplies in the world are lower again this year. And of course, Brazil had a big crop, and they're still competing with us on the export side. But Ukraine, obviously limited by war, having a problem there, as well as drought in the U.S. Hitting supplies, as we see in that crop estimate today. The history of cash corn prices. This blue scatter chart gives us an indication of where prices normally trade when USDA is estimating a 9% ending stocks to use ratio. So I look up from the red arrow and find the red line, which is the center of all those blue dots, which is past cash corn prices over the past 22 years. It gives us an idea that typically when we have supplies at this level, the target price for corn is roughly $5.80 a bushel. And by the way, that's indexed for inflation. So it's just kind of a rough guess valuation method that we have to correlate supplies and prices. And so that $5.80 target is not too far off from where cash prices are today. Our DTN National Corn Index gives us a national average of $6.65 last night. And so we are still above that a bit, but obviously there's concerns about Argentina's corn crop out there helping to support prices lately. The grain stocks estimate. So for December 1 corn stocks, and I'm always very glad that USDA does the quarterly grain stocks report. So they're, I think, one of the most important things USDA does to help us understand actual supplies. And it was a good thing that they came through with this today, because USDA found 10.81 billion bushels of corn on hand as of December 1st. That was less than the trade expected. The trade was looking for roughly 11.2 billion bushels. This is the lowest total in 9 years. And of course, it goes along with the notion that we had a smaller crop than was expected before today's report. But also, first quarter demand has actually not been down as bad as it looked like on the surface. First quarter demand totaled just over 4.5 billion bushels. That's down 3% from a year ago. But when you consider how slow exports have been and all the attention that the slow exports have gotten, first quarter demand being down 3% really is not that bad of a market of movement for corn supplies here. So I think that December 1 stocks estimate very interesting, and of course a bullish factor for today's corn price. Here's the corn exports. This is what's gotten a lot of attention and has been very disappointing so far this year. As of the January 5th, which was the report that just came out this morning, 409 million bushels of corn has been shipped so far. It's down 32% from a year ago at this time. Total commitments, meaning all the sales outstanding plus the shipments, are actually down 47% from a year ago. The year ago level is represented by the green shading on this chart. The black line is the 4-year average. So you can see the current pace we're on is still well below not only last year's pace, but also the 4-year average. Corn exports just have not had the activity this year that they normally do this time of year. Now, Brazil currently has the cheaper corn price. That won't last forever. Their supplies basically will start working down here pretty soon. And then we should have several months, especially with Argentina's corn crop in trouble. We should have several months of better export business before Brazil's next larger crop comes due in July. So we have that to look forward to a bit. As far as on the ethanol side, just a month ago, things were looking quite concerning for ethanol. The margins had narrowed at the plants, and there was talk about plants possibly idling through the holidays. But we can see that things have changed quite a bit since then. The blue line on this chart is USDA's estimate of corn's processing value. So what is corn worth when you break it down into the parts of ethanol and distillers grains and corn oil? And throughout the fall, that was largely $9 to $9.50 a bushel. So plants were getting a pretty decent return and had good strong bids for corn through that time. But then in early December, we saw that processing value fall rather dramatically. And we saw that alongside a sharp drop in the price of ethanol itself. And that's when the concerns came in. But as you can see, just earlier this week, that processing value is back up to $8.88 now. So it's at a healthier margin, I would say. And it looks like we should see ethanol plants starting to get a little more active again with this better margin. The national corn basis. I have to say, of all the market clues we have, I think the corn basis is the hero today, which was trying to tell us that the corn just wasn't out there that was being previously estimated in the WASDE reports. And the lower crop estimate, along with the lower than expected December 1 corn stocks, maybe helps us explain now a little better why the national corn basis has been so strong. As of last night, our DTN index was at $6.66. That's up 8 cents from where it was a month ago. The price is 10 cents above the March contract, which is our basis, and that is the strongest basis that we've seen in over 20 years. So all the squiggly lines on this chart are where basis normally trades the past 20 years. As you can see, at 10 cents above, we're sitting well above the normal basis for this time. And finally, we got a little better explanation of why that is in today's report. As far as the spec positions go in corn, I was quite concerned before today's report because corn was showing signs of breaking down technically. And frankly, we have a lot of non-commercials on the long side of corn. there's a pretty heavy position on already, even though those positions have come down the past year. There's still a lot of speculators on the long side of corn, but today's report will help fundamentally shore those prices and give a little more confidence on the non-commercial side of the market. So I would say the threat has been minimized in this report. Okay, let's take a look at soybeans. We also had a little bit of excitement in soybeans to talk about. Again, let's start with the upper rectangle, the production side of the market. We see that the planting area stayed the same, 87.5 million acres. The harvested acres was reduced slightly from 86.6 down to 86.3. The yield on soybeans nationally was reduced from 50.2 to 49.5. That surprises me a bit because I was concerned that the Eastern Corn Belt results were so good late in the harvest season. I thought we might actually see that yield and the production estimate go up a little, but that is not what USDA found here on Thursday. The new crop estimate for soybeans in the 2022 year, 4.276 billion bushels. That's down from 4.346 billion bushels last month, down 70 million bushels. So we're looking at a smaller than expected crop, just as we are with corn. There's only basically one demand change to note here. The export estimate for soybeans was reduced from 2.045. Now it's going to be 1.99 billion bushels. That's a little bit surprising to me because the export sale pace has been doing quite well and has a good chance to come in still at the previous estimated level. But I understand when USDA notes that we have a smaller crop out there, it's natural for them to reduce the demand side of the market to go along with the smaller amount of supplies that we're going to have through the season. Take it down to the bottom line here, we see a new ending stocks estimate of 210 million bushels instead of 220. That came in less than expected. The market was looking for 236 million bushels. They were actually looking for a small increase in the crop estimate, same as I was. But that's not what happened today. So USDA's new 210 million bushel estimate stands now for the month of January, and that is just below 5% of annual use. The last thing to point out, the average farm price increased for USDA from $14. Now they're expecting an average of $14.20. As we look at the international estimates for soybeans, we can look at the upper right corner and we see a small increase in USDA's estimate of world soybean stocks from 102.7 million metric tons now up to 103.5 million metric tons. If we look at the green rectangle, we'll see some of the changes for South America here. So similar to corn, we see a reduction in the Argentine crop estimate from 49.5 down to 45.5. And while we're on the topic, I should just mention that the Rosario Grain Exchange estimated Argentina's soybean crop at 37 million metric tons today, the lowest in 14 years. So if the locals are right, there's more room for this soybean crop to come down. But keep in mind, it hasn't started the pod filling stage yet. So we can't totally discount it too early, I don't think. On the soybean crop estimate for Brazil, we've been noting good weather the entire season long, and USDA increased slightly its record estimate of Brazil's soybean crop. Instead of 152 million metric tons, now we're looking at 153. In the producing nation of Paraguay, that estimate was kept unchanged at 10 million metric tons. The last thing to note here, we did see a kind of a small increase in China's soybean crop estimate. China doesn't produce much in the way of soybeans, especially in relation to how much they demand. But they did get almost a 2 million metric ton increase, and that encouraged USDA to reduce its import estimate for China by 2 million metric tons. So instead of 98, USDA is looking for an import total of 96 million metric tons. And of course, a lot of that will soon be coming from Brazil as they harvest this soon-to-be record crop. The history of cash soybean prices. What should cash soybean prices trade at when we have an ending stocks-to-use ratio that's just under 5%, as it is in this report today? Well, the historical target points to about $14.20 a bushel. Currently, soybeans were trading at $14.66 last night on DTN's national average of cash soybean prices. So we're just a little bit above that historical target, not too far off. And it's interesting now that the market has kind of a mixed view. We've got good weather in Brazil and poor weather in Argentina. So we have a bit of a mixed bag on moving forward. The December 1 soybean stocks came in less than expected also, not by quite as much as they did for corn, but 3.022 billion bushels was less than what the trade was expecting of 3.145 billion bushels. It's the second lowest total in 6 years for the December 1 totals. And the interesting thing is it showed first quarter demand up 2% from a year ago. Just over 1.6 billion bushels of soybeans were used in the first quarter. That's a pretty healthy demand pace. And of course, we've seen active export demand for soybeans, as well as some fantastic crush incentives. So not too much of a surprise, I would say, to see that strong demand here in the first quarter. Soybean exports have roughly been keeping close pace, not quite up with last year's pace, but a little above the 4-year average, as you can see on this chart. As of this morning's report, soybean exports totaled 1.09 billion bushels. That's down 8% from a year ago. The total commitments, when we include outstanding sales on the books, are actually up 5% from a year ago. So I think we're just something like 420 million bushels roughly short of USDA's original export estimate as far as needing sales on the books. And with 7.5 months left in the season, we ought to have a good chance of actually trying to get there, let alone reach the lower export estimate that USDA has for soybeans now. So there's nothing yet to be discouraging about the export pace for soybeans, but keep in mind, we do have a record crop on the way from Brazil. That will slow things down for the U.S. dramatically here pretty soon. The soybean basis, similar to corn, it is on the stronger end of where it's been the past 20 years. In fact, last night's DTN soybean index closed at $14.66. That's 27 cents below the March. That's the strongest basis we've seen for this time of year since 2013. And if you compare it to all the other squiggly lines, which is all the other basis of the past 20 plus years, you see it's about the fourth, I believe, or the fifth, there's 4 years higher where the basis has actually been stronger, but we're about the fifth highest basis that we've seen in the past 22 years. So still a very strong indication of supplies being low and demand for soybeans being quite active. Here is the main backbone of soybean demand, not only last year, but I'm pretty sure will again be the strength of soybean demand again in 2023, and that's the soybean crush. And if you look at the blue line, that is the value of what you can earn when you crush a bushel of soybeans into their components of meal and oil. As of last night, that was up to $18.36 a bushel. That's well above the cost of the March soybean itself. By the way, this is all based on the March futures contracts. So the crush premium currently showing $3.43 a bushel is among the most profitable crush returns soybean processors have ever seen. And of course, the big boost to the crush premium that's gone on in the past year and continues this year is the increasing use of soybean oil to be used for renewable diesel. But I have to also say that the weather situation in South America is also adding to the strength of the crush incentive, because Argentina is the world's largest exporter of soybean meal and bean oil. And with weather problems in Argentina, that's supporting the prices of meal and bean oil in relation to the price of soybeans. So you can see that here with the strengthening of the crush premium. That is the green line on this chart that we've seen over the past month or month and a half. Whoops. Before we go on to wheat, just want to check in and point out that the specs have had a change of heart when it comes to the soybean market. Soybeans have been trending gradually higher the past few months, actually since harvest time, and specs have started adding to their long positions on that side of the market. So it's not unusual for specs to follow a market that's trending higher, but also because it's getting attention from the hot, dry weather situation in Argentina. That's also attracting specs on the long side of the market. At some point, this may become a concern, but for right now, the fundamentals are mostly supportive. I would say in soybean meal, it might get a little frothier, where we have an extraordinary amount of speculators in the long side of meal, historically speaking, and sometimes they'll have a tendency to overdo it in these weather markets. So that's something to be careful of moving forward. Okay, I've thrown a lot at you so far. Let's see if we can do one more crop here. Let's take a look at the wheat estimates. And in the wheat estimates, there's a little explaining to do before we get to the new crop estimates. In the second column, we had an unusual adjustment today. The ending stocks estimate was actually kicked up from 669 to 698 million bushels for old crop ending stocks. Now, it's kind of unusual for USDA to adjust that at this point, but they explain that with a 29 million bushel decrease in the feed and residual category. How they came about that or discovered that, I don't even know how to begin to explain. But as you'll see, they'll make up for it in the new crop estimate. So understanding USDA just boosted the old crop ending stocks estimate, which ended back on June 1st, to 698 million bushels. Now we move to the right column, and we see that we have a new beginning supply amount of 698 million bushels. So we've got that increase there. But then when we slide down to the feed and residual category for the new crop season, we see a 30 million bushel increase. So basically somehow that feed demand was shifted out of the old crop into the new crop season for whatever reason. There was no change in the production estimates for the new crop season. So it's kind of a wash a bit to say. But I will say the final ending stocks number, when you get to the bottom, 567 million bushels, is just down slightly from the 571 we saw a month ago, and it came in less than expected. The trade was looking for 582 million bushels. Wheat, the demand side of wheat being a concern, that exports have been quite sluggish, but USDA did not change the export estimate in this report. So we have a slightly lower estimate here of U.S. ending wheat stocks. And keep in mind, this season is going to end on May 31st, and we're looking at the lowest U.S. wheat supplies in 15 years. Now, as we break it into the categories, I just wanted to show briefly here that we had some changes to the categories of wheat within as far as ending stocks go. And I'll just work my way from left to right. So starting with the hard red winter category, we saw an ending stocks increase of 15 million bushels in hard red winter wheat. In hard red spring wheat, just a 1 million bushel increase. In soft red winter wheat, we saw a reduction of 7 million bushels to ending stocks. In white wheat, a reduction of 8 million bushels. And in durum, we saw a reduction of 5 million bushels. So small changes, but probably taking the bearish front of that was hard red winter wheat with a 15 million bushel increase. Now, as we look at the world estimates, and this is probably where the interest was going to be for wheat today, if there was any, we look at the upper right corner, we see that the ending stocks estimate for world wheat increased slightly from 267.3 up to 268.4 million metric tons. When we factor out China, there was also a small increase going from 123 up to 124.3 million metric tons. The interesting changes to note, first of all, I thought our attention would be on South American crops today. I thought there might be some more adjustments, but the estimates for both Argentina and Australia stayed unchanged, 12.5 for Argentina, 36.6 for Australia. In the blue rectangle, the crop estimate for Russia stayed unchanged at 91 million metric tons. And for Ukraine, we see a 500,000 metric ton increase in that estimate. And keep in mind that is for the season that's actually behind us. It's been harvested. The other thing to note that was slightly interesting was the blue square in the lower right corner shows us that USDA increased Ukraine's export estimate from 12.5 to 13 million metric tons. So once again, Ukraine continues to make a little bit of more progress on the export side. And here for wheat, those wheat exports are going to be roughly down 31% from last year's pace. So actually, I have to hand it to them what they've been able to do throughout very extremely difficult war situation. World wheat supplies, this is a graphic which just shows us how world wheat supplies compare. And again, we're excluding China because A, China isn't really a significant exporter of wheat anyway, and B, it's very difficult to know just what level of supplies are in China. So it makes it simpler just to push them to the side. And we see USDA's estimate of world ending stocks measured this way is down to 124.3 million metric tons, or just under 4.6 billion bushels. It is the lowest supply of world wheat available in 14 years. So this continues to be a tight situation, which if you, like me, are scratching your head and asking why are wheat prices down the way they are, I don't have a good answer from a fundamental perspective to tell you. I do think traders have overshot things to the downside, but fundamentally, it still remains very difficult to explain, and especially after today's report once again. The history of cash wheat prices, I thought I'd try just a little bit of a different valuation method to give you an idea of how odd I think it is that wheat is trading as low as it is. So keep in mind that the current ending stocks to use ratio for all wheat in the U.S. is 30% of annual use. That's the lowest in 9 years. And this chart that I have, the blue bar represents the price of cash HRW wheat in relation to its production cost. And currently, the $7.91 from last night is 6% above its estimated production cost. So here we have the lowest ending stocks to use ratio for all wheat in 9 years, and a similar situation of lowest ending HRW wheat stocks in 9 years, yet we're only trading 6% above the estimated production cost, which is not much of a premium given how tight these wheat supplies are. And if you look at the blue bars over the previous 9 years, we're actually trading roughly in the middle of the range, which is highly unusual to have a domestic wheat situation this tight and just have it not be recognized better in terms of being able to trade above cost. So it remains a very frustrating market to me to explain to you all, but I just have to tell it the best I can. As far as the December 1 wheat stocks go, they also came in lower than expected. So that's 3 crops today that all came in lower than expected on the December 1 wheat supplies. In the case of wheat, it came in at 1.28 billion bushels. The trade was looking for 1.35 billion bushels. So it's significantly lower. This is the lowest total for wheat in 15 years. It's a legitimate situation that we have here. The inventory supports the estimates that we're on track for the lowest ending stocks in 15 years. First half demand was down 4% from a year ago, which actually sounds about right. We know it hasn't been great, but down 4% sounds about right. The average basis for wheat in this situation, unlike corn and beans, we're not seeing some of the strongest basis in 20 years. Nothing like that for wheat. Actually, we're actually seeing a basis that's 31 cents below the March contract, and that's just a little bit less than the 5-year average. So we're just not seeing the strong level of urgent demand for our domestic wheat that we are seeing in the corn and soybean markets, and that's probably the one difference that stands out. Kansas City wheat, as far as the spec positions are concerned, specs have been liquidating for a long time. Of course, they shed a lot of their positions as the war raged on and as the war excitement got on. But just recently, actually, I think there's a mistake on this chart. My apology for that. Actually, the non-commercials are slightly net short at this time. So not only are the Kansas City wheat holdings on the long side of the market the smallest that they've been in 9 years, the non-commercials are actually net short. I'm sorry, the chart doesn't quite show that accurately. I did not get that updated. But anyway, once again, the point being, it just doesn't make sense for traders to be this bearish in a tight supply situation. And I have to wonder if there's going to be some adjustment coming ahead before we get to the end of the season. Okay, the last report we haven't talked about yet was U.S. winter wheat seedings. And this is a report that turned out to be bearish for the new crop season. So all winter wheat acres were estimated at 34.5 million before today, but USDA said that there's actually 36.95, almost 37 million acres of winter wheat planted for the new season ahead. And the crop totals were higher for just about every category. So for hard red winter wheat, it came in at 25.3. That's up from a year ago. That's also above expectation. For soft red winter wheat, it came in at 7.9 million acres. That's up from a year ago and above expectations. And white winter wheat came in at 3.7 million acres. That's also up from a year ago and slightly above expectations. So if there was one slightly bearish thing in today's report, it was the winter wheat seedings estimates from USDA. In conclusion, I have to say, I didn't finish my sentence there under corn, sorry, but for corn, this is a bullish report. Obviously, we saw smaller crop estimates for both corn and soybeans, and all three crops came in under expectations for their December 1 corn stocks totals. So that's a pretty strong statement right there. In the case of soybeans, I call this a neutral report. We did have slightly lower ending soybean stocks for the U.S. compared to slightly higher world stocks. We obviously still have a big record crop coming from Brazil, which is a concern for prices. And then lastly, for wheat, it also was a bullish report. We've got U.S. ending wheat stocks came in and still are at 15-year lows, and that's supported by our December 1 grain stocks report. Before we get to questions, I just want to let you know that March corn is currently trading up 14 cents. March soybeans are trading up almost 24 cents. March Kansas City wheat is up 12. Chicago wheat's up 2, and March Minneapolis wheat up 12 1/4. So with that, I'll hand it back to you, Stephanie, and ask for any questions.
We had a couple questions today, Todd. So the first one is, how has the Mississippi River levels affected exports?
It's obviously, excuse me, the soybean, excuse me, I'm going to get one sip here. Okay, sorry about that. It has slowed the pace of primarily soybean shipments, but not dramatically. I have to say, the guys working on the river to keep that barge traffic going have done a remarkable job. And to be at this point in the season and only have our soybean shipments down 8% from a year ago, considering the low water levels that we were and are still dealing with on the river, I think is a testament to how good they've done at keeping things rolling. We can't really blame the river situation for the lack of corn sales because we could still sell corn and there's still opportunity to do that. So I'm sure it's limited the ability to ship corn somewhat, but soybeans gets the first turn on the river, and that's where the primary impact has been. So I have to say, given the situation overall, I think it's actually been pretty minor impact as far as affecting actual sales and shipments.
Great, thank you. Next question is, when will the spec traders start to ignore the Argentina weather and focus on the rather large Brazil crop?
Yeah, isn't that $1 million question? I suspect that Brazilian harvest has started very early in the north, and it takes about a month or two to work its way down south. I suspect at some time in the next 2 to 3 weeks, as we start to hear more feedback in the news from what's happening in Brazil, I think that will start to have greater attention. And as always tends to happen to weather markets, at some point, traders are going to get tired of hearing the same old thing about Argentina being dry. So, of course, you have to say the soybeans haven't gone through pod filling yet. So if a rain did come through at the right time, that certainly would change their attention here for a little bit. But I would say overall, probably in the next 2 or 3 weeks, I think things will transition more to Brazil. And it should also affect our U.S. export sales, and probably already has started to already.
Thank you. And last question, how does the market outlook for 2023 look like for corn, wheat, and soybean? If you had to choose 3 bullet points to describe the outlook for the year, what would that be?
3 bullet points outlook for the year. Well, of course, weather is king, and we're talking about probably a U.S. summer now that's not going to be impacted by La Nina anymore. So we're looking for more favorable weather conditions is the early take that we have this summer, and that would go a long way in helping us resupply some of the surpluses we have, especially in corn and wheat. Now, the trick on wheat, of course, is the southwestern plains is in horrible shape in terms of drought, and there's probably not going to be a lot of relief in that for this year's crop, for the hard red winter wheat crop. But the spring and SRW wheat production could do better. So wheat would be the number 1 bullet point. Number 2, I think the ongoing story about crush demand for soybeans is going to remain quite bullish. And even in spite of Brazil's record crop, I think there's a good chance that we're still going to stay with very tight soybean supplies when we get to the end of August this year. And bullet point number 3, well, of course, Ukraine's always the outlier, or put it under the category of what's Russia going to do next, and the uncertainty of that continues to weigh over the market.
Great, thank you. That was all the questions for today. I would just like to thank everyone for joining the webinar today. And as a reminder, today's event has been recorded and the rebroadcast link will be up on dtn.com/WASDE-webinars within the next 48 hours. Also, if you have any additional questions or would like more information regarding our topic today, you can see Todd's contact information here listed on the screen. This concludes our event. Thank you everyone for joining and have a great rest of your day.
Thanks, everybody.
Thank you.